Welcome to Maine Real Estate Today. I'm your host, Steve Lachance with Integrity Mortgage, and I'm here with a colleague of mine, Billy Kimball from Integrity Mortgage. Billy, welcome.
Hey, what's up, bud? How you doing?
Good. What do we want to talk about today?
Let's talk about whether it's a good time to buy or not. There seems to be like a lot of conflicting stuff out there, pros and cons.
Yeah, I've had a lot of conversation about this. I keep throwing comparisons back to when I purchased way back in the 90s. I'm old. But when I first bought my house...
You bought a house back in 96, right?
Yeah, good memory. Yeah, 96, I bought a house in Westbrook, and I paid like $68,000 for it. Needed a lot of work, but we puttered around with it, and thinking this will be my dream home once we got it all fixed up. It wasn't. And I didn't have to hang on to it, but I use this analogy because in less than 2 years, I was able to sell that home, make about $150,000 on it, and use that equity to build a house. And my mortgage payment with using all that equity was almost the same as that little tiny $68,000 loan. Yeah. So point being is it was a stepping stone, which I'm finding more buyers need to kind of focus on that because it is a stressful time to buy when prices are up like this and interest rates are up at the same time. But what do we both know about what's going to happen with rates?
Yeah, rates are going to go down. I mean, historically, we've had, 4.5% for the last 15 years or so?
Exactly.
So yeah, they're going to go down. And people, the other thing is everybody's out trying to buy their dream home. No one ever buys their dream home. It's always a stepping stone.
Right.
Most people have a mortgage for 5 years and that's it. And then they start the whole process over again.
Yeah, because, I'm always saying, now's the right time to buy. And I sound like a broken record because now's the right time to buy. But I could tell you, I'd rather buy right now as compared to the last 3 years. Because what have your buyers been going through the last 3 years?
It's competition. You're up against 100 different buyers and you're throwing $100,000 over asking price. It's absolutely ridiculous.
Exactly. So we're not seeing that right now. Yep. And especially in the wintertime in Maine too, or leading up to the spring, sellers that are selling now, it's my favorite time. They're selling because they need to sell.
Yeah, of course.
They're not selling because the garden's blooming and the flowers look perfect and maybe they can hide the dog crap in the backyard with the snow. But I'm telling you, they're selling now because they're serious.
That's when you get the deals, though. You know what I mean?
It is. So. Yeah, that's when. And buyers, for the same matter, are not just looky-loos. They're really trying to buy. Yeah. It's not fun to run around in the cold.
Yeah, no. I think the biggest thing that people are worried about is, we went through 2008. It was, just crazy times. We lost, 50% equity in houses. Mm-hmm. And I think people are worried about that happening again.
Well, let's talk about that because that's not really what's happening now.
No, it's not even close.
But we're seeing a ton of comparison to that right now. Yeah. We're actually seeing, you told me just before the show, we were talking about, I just saw something on Reels that was saying it's all gloom and doom, market's going to crash.
Yep. And the thing is, there's a lot of similarities to 2008, but the biggest thing that isn't similar is the amount of inventory, right?
That is true.
So, builders, we thought back in, 2007 that this whole, mortgage and housing, bubble was just going to keep going, right? Mm-hmm. So construction guys were just building house after house. They had cheap lending. They were borrowing 100% financing and just building house after house. Right now, they learned from 2008, so we've got about 25% of the inventory that we had back then.
Yeah.
And people just can't find houses.
That's so true. And even like when we talk about new construction, you can get your dream home because sky's the limit. You're not going to save money going that route. You're going to pay for it, in fact, dearly. But new construction gets you everything you want. Yeah. But it's never going to get you a bargain. And often we see buyers coming to us saying, I think I'm just going to build. I can't find anything, so I'm just going to build. I'm like, you might want to take a look at those costs as well first before you go that route.
Yeah. Because we're still seeing the inflation with the cost of goods. So, that's going to be around for a little while longer. Lumber materials, all that stuff. It's not as high as it was, a couple of years ago, but it's still high. And the price of labor, everything's gone up. So, building a house right now is definitely expensive. Mm-hmm. Plus the time frame. You're looking at what? A year minimum to build a house?
Oh, if you can find a contractor.
Yeah, opposed to 4 months like it used to be.
Yeah, no, what we were seeing last year and the year before is contractors saying, I can't give you a final price yet.
Yeah.
Because we don't know what you think about it, a year from now, they don't know what the materials are going to cost you in a year.
And God forbid you order the wrong materials. You order the wrong windows or the wrong granite or anything like that, it's going to take you another 6 months to get back in.
Back ordered, out of stock. That's not to put gloom and doom on building because my second home was new construction and it was kind of fun.
Yeah.
It was really pretty cool.
Well, yeah, it's perfect. When you're picking out everything, every little detail of your house and you get to move into that, it's perfect.
Although you got to be careful on that too, because I got a $300 lighting allowance when I built my first house. You know the light over our kitchen table?
That's one room now.
One light. But the dining room light that we got, or no, it was the kitchen light. that was like $380.
Yeah.
And that was all I had for all. There's a lot of lights in a house.
It's crazy. I mean, it's crazy what it's done in even just 10 years. I mean, I built a house in 2010, 1,400 square feet, 3-bedroom, hardwood floors, granite countertops, and the cost to build with a 2-car garage was $90,000.
Ugh. I wish you could see
and
that
that's in
again
Westbrook.
today.
Can you imagine that? $90,000.
Wow. Yeah.
I mean, we sold it obviously for a lot more, but
Right.
still, the for a cost to build of $90,000 for a 1,400 square foot house, it's insane.
Those
it's
days-
at least double now.
Those
if
days
not
are
triple.
over, if not triple. I haven't seen builders really even want to entertain a build package for under $300,000 right now.
No, why would you?
No, exactly. They're just not all that interested in doing it. And the margins for them, to be fair, are a lot smaller than they used to be as well.
Yeah, for sure.
So, and again, they're taking on some risk. But without getting in too deep into the weeds on new construction, I think the theme here is, though, with the tactical advantages that you have purchasing a home right now, there may seem, okay, this is kind of a terrible time to buy. Prices are high, interest rates are high. But what I've been finding is I have buyers that in the last few years can't get anything under contract. Now they have a good opportunity. At this point, you have fewer competitors.
Yep.
And you go in and you put in an offer, and what we know, there's never a guarantee about this, but we know what goes up has to come down. As the feds continue to raise rates, we know they don't want to keep them there. It's deliberately trying to hurt the economy to slow things down for inflation.
Yep.
They want nothing more but to lower those interest rates. So as soon as they possibly can, as soon as there's enough signs that inflation's back in check, we know rates are coming down. So you don't have to look at this as a permanent. If you can afford it now, you're not going to have that permanent interest rate.
Well, that's the beauty of it. Is like if you can afford it now with a 6%, 7% interest rate, you're doing great, because plan on a year or two down the road, you're going to be back at 4%. And your payment's going down dramatically. It's not like the old refinances back in the day where maybe you drop 0.5% or 1%.
Yeah.
We're going to drop a good amount, and your payment's going to go down significantly.
No, I agree with that. Which is why I'm now seeing a lot of buyers looking towards purchase plus improvement stuff.
Yep.
I hate really getting into a whole other, because that's a whole other show all by itself. But talking about purchase plus improvement is avoided by so many lenders out there.
Yeah.
And where we brought in a specialist that can do these for us, because they are time consuming.
Yeah.
We want to make sure that they don't become that relationship killer, as we used to joke about.
Well, the thing is, we're going to need that product now, because we've got first time home buyers that are coming out of college. And all of a sudden, the first-time homebuyer price is $350 and up.
Yeah.
Whereas 20 years ago, you could buy a house for $90,000 and live comfortably.
Yeah.
But
yeah.
not anymore. Especially if you're going to live in the greater Portland area.
Right.
You're looking at a starter home $350,000 to $400,000.
Right.
So if you can find something that's below that price and do a 203K or rehab loan, and buy something cheaper and then put in a little bit of fix up to it.
Right.
You're doing way better.
So I want to kind of steer in a different direction here for a moment. As we talk about, this is still a pretty decent time to buy with the opportunities to lower rate down the road, is about the importance of being properly qualified. Yeah. There is a huge problem with loans these days of not making it to the finish line, because either the lender is not asking all the right questions, or they're kind of tiptoeing on bugging somebody for all the things that are really going to need to get across the finish line.
Yep.
You've seen that too?
I mean, I think the biggest thing nowadays is working with a reputable lender that's been around for a while too.
Right.
Because I look at the relationships that I have with realtors and stuff, and if I know I've got a buyer that's putting an offer in, I'll call the listing agent.
Right.
And I'll say, hey, listen, we've fully pre-approved this buyer. I've been doing loans for 20 years. This one's going through.
Okay, so somebody who's not really astute to this stuff, and they haven't been through the process before, explain the difference between pre-qualifying somebody versus actually pre-approving them.
So everybody has their own opinions on this stuff, and most mortgage brokers do, especially if they're new to the business, is they'll look at your financials, kind of do a quick rundown, and it will be called a pre-qual. So It's just us looking at it, using our knowledge, and saying, all right, this looks like it's going to be approved.
Yep.
A pre-approval is taking all their information and buttoning it up like it's a real loan and a live loan, and submitting it to underwriting and getting an underwriting approval. Yep. So when we go to a listing agent and say, hey, this person's fully approved, that means we've done it all already.
Right.
Like everything's done.
Employment's been
we
verified.
know it's almost as good as a cash offer.
It's almost that close. Yeah, it really is true. And I'm going to tell you, the problem is a lot of lenders out there are putting that label of approval on something that's really just qualified. I had one a couple days ago, a borrower says, yeah, I'm already all approved in my bank. I'm like, great, but we want to get a second opinion from you. And I say, okay, what I'll need is tax returns, W-2s, pay stubs, bank statements, and all the usual stuff.
Any of that stuff.
They're like, oh, what do you need tax returns? They didn't need tax returns. Well, I don't have those, and we can get them, but my bank didn't need all that. I'm like, all right, we got to slow down because you're not really approved. Because I can guarantee that when that something goes under contract, that underwriter is going to get those. They're going to ask for the tax returns for whatever the reasons are. 9 times out of 10, they're going to ask for them, and/or the W-2, and/or the pay stub, whatever the case may be. And it's always the devil's in the details. That one tax return. I had a application just a few weeks ago where everything's filled out. I've had long, extensive talks with this customer. I've gotten all the documentation that I think in, except I was still missing last year's tax return. Finally got it the day after they went under contract. And on the tax returns, we see now dependents that were not on the application. Billy knows where I'm going with this. That which now the underwriter, of course, is saying, were they ever married? Yeah, they're divorced now. Okay.
Child support payment. Where's
now it turns out there's $600 and something for child support on this one. We run the numbers. It doesn't work. So after all these months of saying, I need that tax return, I need that tax return, they finally go under contract on a house. I get that tax return. Deal killer. Over just like that.
And the thing is, too, like, you've been doing this even longer than I have. I've been doing this almost 20 years. You've been, what, 26 or something like that?
You're saying
crazy.
I'm old. I get it. Yeah. I get it.
But the thing is, like, as experienced as we are, we still forget stuff. We're not going to know every single guideline. I mean, the book's like this big.
Well, there's as we're talking, they're changing. They're rewriting it right now.
So unless you actually physically take a loan, submit it to underwriting, and have an underwriter stamp off everything, there's no way that you can possibly know everything.
Yeah, and I think that's where this business becomes more of an art than it is a science, because we are constantly, you and I are always brushing up on the guidelines. We're constantly reading it. Not to pick on anybody as a newbie, but there's a reason why our company has always made it. I think everybody here has at least 15 years or more experience, because they don't want that. Again, it seems unfair to somebody who's new. There are some brilliant new people out here that have gotten into the business, but we've forgotten more than they've learned so far. There's just been, without knowing some of the past and what kind of things that cause trouble, you're not really going to know what's going to burn you down the road. And I'm telling you, every single time, it's the devil's in the details. I've used the analogy before. There's a book out there for people that have kids out there that if you give a mouse a cookie, and if you give a mouse a cookie, he's going to want a glass of milk. And if you give him a glass of milk, he's going to, and the story goes on and on. Well, this is kind of similar to, I've had buyers say, tell me everything you need right now. I'll just get it all to you now, figuring you're going to be all set. And being smart, I've given them the full detailed list. This is everything I'm going to need. It's not always true, because this is where the art becomes less of a science, or a science becomes an art, is as a loan officer, I've learned to look around corners. I know you've done the same thing, but you're never really going to know what an underwriter is going to look at, because when we finally get that updated pay stub, there may be a new, strange, odd garnishment that's on the pay stub. We can't just say pay stubs are in, you're all set. There may be things during the process that change, and where we're good is we're experienced, so we're quick thinkers. We know how to actually navigate through that and basically problem solve. I don't like to use the word fireman, because we don't want to get deals that are on fire. That's where I think there's a lot of inexperience out there. How many times have you been the second guy on a deal?
Of course.
Trying to solve another lender's problems.
That never really has to happen. If you do the process the right way, and you're an experienced loan officer, and you like I said, you have every loan run through underwriting before they're making offers. None of this stuff needs to happen.
No. It's so true. Just properly qualifying and get through the basic list, get it through underwriting, and then stay in touch, because that's the other key too, is staying in contact.
You got to make sure that they know to come to you and tell you the truth. Like, hey, did you lose your job? Did you go get another credit card? Did you buy a car? Like, you got to have that open door policy where they know that they can come to you and ask questions.
It's so true. We're gonna find out. There's so many times where people just button up and they don't want to tell you. Don't say anything. You'll probably never notice the difference. I might not.
Everything's trackable now.
My underwriter will figure it out. It's even in that example I gave about the tax returns identifying child support. Let's say I got that tax return, still no dependents on there. That same loan, later in the process, the underwriter pulled what's called data verify. It's different. Every lender uses something different. But they're going to find out. And this person owned real estate last year that they sold. It wasn't on their credit report anymore. Nothing was showing. There was no indication on my end that they ever owned real estate.
Yep.
But it did show up in that system where an underwriter's doing their due diligence to verify, have you ever owned any real estate? Yeah, I sold one last year. Who did you own that with? And again, the questions start to develop, and you can't avoid child support obligations, alimony, separate maintenance. You got to.
They're going to see it in the bank statements, anyways, too. When you see like, oh, that's $600 that you talked
reoccurring
about going
payment.
out every month. What's that payment for?
Well, some customers get smart though, and they say, "Well, the next few months, I'm just going to do cash," and they try to. Those are again. There's almost always a way that they're going to find out. So there's no avoiding it. But if they work with us up front, we'll have a plan. In that particular case. We worked out a backup plan before we ever even went on a contract. Not for that reason, but hey, this is kind of marginal on a conventional, but it is the best for you financially. If anything comes up, we need a backup plan. And plan B was to switch that one to an FHA, where it allowed a tremendous more difference in how much house they could afford.
And that's another key of, picking who you work with, right? Do you pick a company that doesn't have all the loans, or do you pick a company that has the loans plus other outside sources like local banks and all that stuff to work with?
Let's talk about that, because that was one of the reasons why I came to this company in the first place. Because I worked at an awesome company, but the downside to it is they were not really. They're a lender, a direct lender. They have their own money to lend. That's great. They're regulated just like a bank. That's awesome too. But when it came to being competitive. Sometimes they were on, sometimes they weren't.
You get those, bigger corporations that do things very well, and they have great processing and great teams and all that stuff, but they just don't have the products.
Sure.
You know what I mean? Especially for an individualized area. So they're good for across the country and getting the majority of loans done. But the reason I came to Integrity was because we're a small local company.
Right.
So we have the ability to do all those loans, right? But we've had such a local presence that we can go out to the local lenders and broker loans to them and have all those portfolio different deals, and it just makes our whole product list increase.
Well, I could tell you that's a great point too, because if it were not for that, I may have stuck where I was until I think it was the end of 2021. I started to see a lot of investment property purchases, a lot of second homes, camps, vacation stuff, and I had it. We could do second homes, investment properties, all of that. But Fannie Mae and Freddie Mac have had all these extra loan level pricing adjustments because as the market has shifted, they're taking on more risk in that sector. So it's kind of a money grab, but they're adding on these ridiculous pricing to it. So anybody that was doing investment properties was seeing a significant jump in points and fees to get the deal done. Whereas on a local bank, they're not necessarily charging those extra fees. There were no points on investment properties if you wanted it. So, and the rate was pretty competitive. So I never had the ability to just say, you can go to a local bank instead of doing it here. So even though I have the product, I knew somebody was cheaper locally and we could use them. So it's a win-win.
And I looked at, before I came back to Integrity, I looked at what happened in 2008 and all the different weird deals that we did back then. And we did a lot of 2 or 3K loans. We did a lot of FHA. We did a lot of housing that really didn't fit conforming stuff. So we'd ship it out to different local banks.
Right.
And, although I don't think that we're going to have a crash like we did in 2008, I do think that we're going to have a time frame where we have all different products. So people are buying either, houses that are broken down and need fixing up, or they're buying investment properties at a discount, all different things. So you just need that bigger portfolio of different products.
Right. So before we exit out today, in upcoming shows, I'd like to start talking about the 203K program, explain it. Because the average person listening to this is like 203 what? Sounds like a 401K, but frankly, the purchase plus improvement programs, because we have not just the government FHA product. And one of the beauties of it is we work with multiple investors that would do it, and we have some specialists that they take really the major component to
That's a program where you literally can just be a loan officer and just do those loans. And you would, all day, you'd be chasing guidelines and trying to figure stuff out. It's that intensive a program.
Yeah. So thanks, guys, for watching. This is Maine Real Estate Today. I'm Steve Lachance here with Billy Kimball from Integrity Mortgage. But thanks so much for listening, and we'll see you next week.